Hello everybody, I'm Jason Lowe, Head of TAPS, which stands for the Association for Payroll Specialists. Welcome to our special JobKeeper webinar, which we're running exclusively for TAPS members. A little bit later on today, we'll be putting this webinar up on YouTube. So if you're watching us on YouTube and you're not a TAPS member, don't forget to go and take a look at our website, payroll.com.au. TAPS has been around for 30 years now, keeping payroll people up to date with everything they need to know to make sure that they remain compliant. This webinar is an example of one of those sorts of events. So if you're working in payroll and you need to keep up to date with payroll, please join us at payroll.com.au. But for now, let's get started, and I would like to introduce you to our moderator for today, Chris Biddle.
Thank you, Jason. It's good to be with you this afternoon. I think it's fair to say that we've never seen so many new things in the payroll world, and certainly the stuff we're talking about today is very new. And there are some things that are different in that normally TAPS are good at talking about the law and where things are up to in that respect, but today it's a little bit different. Can you explain how that works today?
Absolutely, and today is very different. So before we get started, two things you need to be aware of. The information that we're sharing in today's webinar is correct as of today, the 2nd of April 2020. And the reason I'm highlighting that is because at the moment, we don't have any laws around this JobKeeper payment scheme. And what is happening at the moment is we're not following the normal processes we would follow, in Australia. So let me explain. So normally the Prime Minister would make an announcement and he would say, on the 1st of July 2020, we're going to introduce some new legislation. As soon as he makes that announcement, the laws start to be written, and certainly if it's something that it related to the ATO, they would start building systems and processes in the background, so that by the time the 1st of July came around, the legislation would be passed, everything would be ready to go, the community would have been educated, and we go live on the 1st of July. What's happened on this particular occasion, and certainly with the coronavirus, everything is out the window. The Prime Minister made an announcement on the 30th of March and said, as of today, I've introduced a new JobKeeper payments scheme, but there's no law. All we have at the moment is a number of fact sheets, and I was on a call with the ATO the other day, and they said, right, we've shared the fact sheets. This is how we're planning on it will work, and it's highly likely that 99% of the information on those fact sheets is how it will work in the real world. But what's happening behind the scenes at the moment now with the ATO is they have a couple of days to put this whole scheme together, have laws written, have them approved through Parliament. So we're all a little up in the air at the moment. What they're doing in a couple of days is something that they would normally spend months and months, doing. So we're expecting Parliament will sit again next week, and this legislation will become law. So we'll certainly have more information soon. But for now, we need to start the process, which is the purpose of today's webinar.
Okay, thank you. Up until Monday afternoon, we hadn't even heard the term JobKeeper payment. So what is it?
Excellent. So the JobKeeper payment scheme is all about helping employers who have been significantly impacted by the coronavirus. And I know a lot of us are seeing a downturn in business, and there are concerns about, will I have enough money to be able to afford continuing paying my employees? This scheme is all about helping those employers. And the way it'll work is you will pay your employees as per normal, and then the government will subsidise part of your employees' wages up to a certain limit, and that limit is a fortnightly payment of $1,500 per eligible employee. It starts from the 30th of March and will run for a period of 6 months. And the way it's going to work is that you will start paying your employees now, and then you will receive the money from the ATO as a monthly payment in arrears. So in its simplest form, throughout the month of April, you will pay your employees as per normal, and then you will claim that money back from the ATO at the end of the month. That's the simple overview of how the JobKeeper payment scheme works.
Okay, it's employers who are eligible, presumably there's limits about that eligibility. So who gets it?
Absolutely. And it's an important distinction to make, Chris. It is employers who are entitled to this money. This money will flow on to the employee. And it's really interesting. I'm seeing all these articles in the paper about, will you get the JobKeeper payment and who's entitled? The thing is, who's entitled? It's the employer who is entitled. It is the employer who claims it and gives it and passes it on to employees. So the first criteria is not all employers will be entitled to this payment. The key thing is that we've seen a downturn in business. And depending on the size of your business, there is a different measurement of what that downturn needs to look like. For most of us, we're going to have a business that generates less than $1 billion in annual turnover. And so for those businesses, you need to be able to prove to the ATO that your business has decreased by more than 30%. We'll have a few employers on the line who have an annual turnover of more than $1 billion, and you will need to prove that your turnover has reduced by more than 50% to become entitled to this money. So how do we do that? Basically, what you have to do is, you look at where we are now as a business and compare it to what we were a year ago. And your business needs to have seen a downturn from an appropriate period now to an appropriate period 12 months ago. And that period needs to be at least a month. It could be as much as 3 months for some businesses who operate on different cycles. But you need to be able to say, has our business decreased year on year based on this period last year? Interesting that the words that the ATO is using, turnover will be reduced by more than 30% or will be reduced by more than 50%. There is a little bit of flexibility here, and there's going to be some tolerance built in where employers who in good faith say, look, I've already experienced a large downturn. We're expecting that to be, more. You'll be able to opt into this scheme as well if you believe that you're going to see a greater than 30 or 50% downturn. If it turns out that your prediction was wrong, the good news is that the ATO are building in a little bit of tolerance. So where employers have in good faith assume that their business is going to drop and you haven't quite met that 30 or 50% reduction, there will be some tolerance with the ATO. Now, based on all of this, I want to stress, this is not a payroll function. Payroll people tend not to do all the accounts and know how the business is performing. So for this particular part of the JobKeeper scheme, you will need to work with your, your CFO or company accountant, and they will be the ones to determine whether the business is likely to see a large enough drop and whether they would like you as a payroll person to move ahead and start setting up this scheme.
Okay, Jace, you say it's not a CFO function, but we know where all the questions end up. They end up with payroll. Do you have any thoughts on the idea of individual companies versus groups, and whether there's, do companies apply for it based on an ABN or based on a larger corporate structure?
The short answer is we have no idea at the moment. All we have is a fact sheet and some very, simple explanations. And this is why I stressed at the start of the presentation, this isn't law yet. When it becomes law, I suspect that there'll be far more, and I'm hoping there'll be a far bigger definition around, is it individual ABNs or are we, grouping businesses? So unfortunately for this answer, and a couple of times throughout this presentation, Chris, I'm going to have to say we don't know at the moment.
Okay. So we have some idea about the employers who are eligible, but obviously it's got to flow on to employees. Is there also criteria for who are those employees who can get the amount?
Yes, there is. So let's assume that we've decided that we are going to see the appropriate amount of downturn in our business, and we're going to move forward and take advantage of this scheme. The first step is there is only a very specific set of employees who are going to be entitled to receive this money. And as a result of that, only a very specific amount of people that you can apply to receive this money for. And the first step is you need to take a snapshot. You basically need to take a photo and say, who was employed by this business on the 1st of March 2020. And it's only those people who were an active employee at that stage who are going to be entitled to this payment. The reason they have chosen this date, and the ATO have chosen this date, on purpose, is they want to give money to employees who are most likely to have been affected by the coronavirus and who are most likely to potentially been stood down, maybe lost their job, been asked to work, smaller hours, taken a cut in pay, or whose income is at risk. So they chose the 1st of March. I said, here is a date which is before all this started. So these are the people we are going to try and protect. So you need to have a look at your payroll records and say who was an active employee on the 1st of March 2020. It's important to note that the ATO already has a good idea of who those people are through STP data. In our STP file, we put down somebody's start date, we put down somebody's termination date, so the ATO will be able to see straight away whether they were in current employment. The other thing they'll be able to see through STP data is that for the pay period that occurred on the 1st of March, were they an employee that we got additional STP data for and saw that they received income during that time frame. So I really want to stress, it's a snapshot as of the 1st of March. Now, that's not to say that they had to be working on the 1st of March. They just had to be an active employee. So maybe, they were a casual employee who hadn't worked for a couple of weeks, but, they had worked beforehand, they were due to come back, they were an active employee on your books. That is perfectly fine and acceptable. But the first step is who was employed as of the 1st of March 2020. Once you have that list of employees, only some employees in that list are going to be entitled to receive the payment. Good news is all full-time employees will get it, all part-time employees will get it, but when it comes to casuals, it is only long-term casuals that are going to be entitled to this payment. And the way they have defined long-term casuals is it is someone who is employed on a regular basis for longer than 12 months as of the 1st of March 2020. And unfortunately, that's a hard and fast rule which can't be played with. So if your 12-month anniversary happened to be the 2nd or 3rd of March, unfortunately, they would miss out from this payment because they needed to have more than 12 months as of the 1st of March, which is why I'm really, harping on about taking a snapshot and looking at what your employees look like and who they were on the 1st of March 2020.
Now, Jace, just thinking through the casual issue a little bit. Now, the time frame, that's clear. That seems rock solid. The regular basis of, often we can have casuals on our books that may not have worked for a significant amount of time, but they're still on our books, and they, do we have to do some kind of reasonableness check as, I guess, the likelihood of them having been given shifts during this period?
Absolutely, I think so. And your words are perfect. It's some sort of a reasonableness check. If you haven't used that temp in that casual in 6 months, it doesn't sound like they were employed on a regular basis. We hadn't accessed them in 6 months. My gut feeling is we would exclude that person. But let's say you've got a temp who maybe only works 1 day a month, but they've done that over the last 12 months. I believe, and I'd be interested in your opinion, Chris, whether that would be enough to make them a regular casual. And I think that potentially is.
And well, I think by pretty much every other definition of what a regular systematic casual would be, I think they would fulfill that criteria. So I'd be surprised if the ATO moves to a different characterization of it. So that would certainly make sense to me.
Good. I think we agree then. So it's all full-time employees, part-time employees, and long-term casuals. And the final criteria on this slide is they must be at least 16 years of age. So the good news here is, if you're thinking about an organisation like a McDonald's or a Hungry Jack's, for example, and they might employ lots of, 17-year-olds and 18-year-olds and even 16-year-olds, they would also be entitled to this payment. So certainly younger employees can be included if they meet the appropriate criteria, but if they're under 16 and still in the 15s, unfortunately they miss out. So that's the first part. Take a snapshot, work out who's full-time, part-time, and who your casual peoples. They are in. The next requirement is that today they still need to be a current employee. So they still need to be on your books. But the definition of who's on your books can be quite broad. So it's those employees who are working right now at the moment and still active employees on those books. It also includes employees who have been stood down. In the webinar we ran last week, we spoke in detail about how the stand down rules work. And if you want to look at that webinar, it's available on the TAPS YouTube channel. But stood down employees are still deemed to be active employees, so they can be included. They're deemed to be a current employee. And we'll talk about this third group of people a little bit later in the presentation, Chris, but there is also an opportunity to rehire people and get them involved in the scheme. And in simple terms, we may have had someone who was employed on the 1st of March. Let's say we had to make them redundant on the 17th or 18th of March because we didn't have a need for them. Now that this scheme has come in and the government is going to give you money to fund your payroll, there is actually an opportunity for you to go back to that redundant employee and say, look, now I've got some money coming in from the government. I will be able to afford to re-employ you. Would you like to come back? And I've got an example of that a little bit later in the presentation. So just hold on to that one for just a moment. There is one last criteria, is they must be an Australian citizen, or there are a whole heap of visas that are included as well. Now, it's interesting. I was speaking to a friend of mine last night and he employs some people on a whole range of visas, and he gave me a call and said, Jason, I've got these people on various visas. Can you tell me whether they're in or out? And unfortunately, I had to say, I don't know. That's not my area of expertise. I work in payroll. I know about paying employees. I am not an expert in every possible visa type. And some of the visas he read out to me off his list, I'd never even heard of them. And I suppose if you think about it from a payroll perspective, we're not the ones who hire them and do all the visa checks. Our obligation in payroll is two things. When somebody starts, we might go into the Vivo system and type in the details, and we look for that little green button that says, yes, they have work rights in Australia, and you go tick, they're able to work in Australia. When an employee fills out their tax file number declaration form, it is their responsibility to work out whether they're a resident for tax purposes or not, and we rely solely on the advice that we are given by that employee because it is their declaration. And that's the extent of my knowledge about lots and lots of visas. So as a payroll professional, you might be struggling with, I've got somebody on this visa or I've got somebody on that visa. Are they in or out of the system? I suspect you probably need to work in tandem with somebody from HR and go through this list, or whoever it is in your business that knows all about the different visa types. But the good news here, Chris, is certainly a lot of New Zealand people who are living and working here in Australia will be caught up in this system, but you still need to go and do the research.
Okay, thank you. Now, Jason, I know that you've pulled together a step-by-step guide. Can you start us stepping through that?
Absolutely. So step one is register an intention to apply on the ATO website. And this is really interesting. Normally, if you're entering into a scheme, the first step would be fill out the application form. Because this isn't law yet, and because the ATO is still building the system, there is no application form, but one will come. So certainly at the moment, all you can do as an employer is register your interest with the ATO and say, we are interested in joining this scheme. And we've got the link there, or you can just Google it, go to the ATO website, put in your details, put in your email address. And then at some point in the future, when the ATO is ready, they will send out the details and say, right, now you can formally apply to be part of this scheme, and that is where you'll do your declaration and say, yes, we've looked at our figures, and yes, we are seeing the appropriate downturn, whether it be 30% or 50%, and you put in that formal application process and you'll be part of the scheme. Having said that, we still need to get started right now. And to a certain extent, we need to take a leap of faith. There is no law. There are still a couple of interesting little questions, and your question about, the casual employee, and how we really defining, regular, we don't know because there's no law. If you've got some doubts about a particular sort of visa, all we know is that list that I gave you on the last slide. You need to take a little leap of faith and go, right, the Prime Minister has made this announcement. We know the government is building it. They've provided these fact sheets. We believe these employees are in. We're going to start paying our employees now based on the assumption that we are going to get approved. Everything is going to be good. And then, at the end of the month, we'll get our first subsidy payment from the ATO. So you really need to sort of get started now.
Okay. Well, whilst you say it's a leap of faith, Jason, I think it's a reasonable leap, and so I think people should certainly start moving towards it. So you register your intent. What comes next?
Before I get to what comes next, I'm going to agree with you. I said a leap of faith. I think we're 99.9% confident this is going to go ahead. But I'm just hedging my bets a little, Chris. So you asked about the second step. Now, the second step is to make a decision about which employees are eligible, who you are going to pay, and then I suppose ultimately who you're going to put on your list and claim the money back from the ATO. And from this perspective, there are 4 groups of employees that you potentially could choose to put on your list. Once again, we need to keep in mind all the criteria about that 1st of March snapshot and, based on the various visas. So work on your list and then decide of those people, who are we going to continue paying? So there are probably 4 groups of people you need to think about. The easiest one in the top left-hand corner are current active employees. People like you and I, and you people listening at home who are in current employment. You're still getting paid by your employer. As long as the business is seeing the appropriate downturn, they can continue paying you, and then at the end of the month, apply to the ATO and put you on the list and get, the $1,500 per fortnight for yours and mine wages. So those are the easy people. Rehiring people. Once again, I said I've got an example coming up, but I just want to reiterate, if you have let somebody go, and that may have been a casual or it may be a full-time or a part-time person that you had previously made redundant, you can certainly think about rehiring them, putting them back on the books, paying them again and getting that $1,500 from the ATO. And this is, I suppose, the true intent of this legislation is that the ATO wants the employer to keep the relationship with their employees. They don't just want to let them go and then at the end of this, these people remain unemployed and remain on, unemployment benefits. They want them back with the employer. They want you as the employer paying them so that when all these restrictions are gone and once the economy starts to build again, you've got your pool of talent who are sitting there ready to go and start working. So you can certainly think about rehiring. I'm still going to get you to park that one. We're going to do a big example on this a little bit later on in the day. The final group of people that you want to think about potentially paying and including on your list and getting money from the ATO are employees that you have previously stood down. And those employees will fall into 2 categories. First of all, the employees who you have stood down, who you have no work for. There's nothing for you for them to do. And the classic example, I keep on thinking about the casino. The casinos will hire a whole heap of dealers who run the blackjack and the roulette. By law, the casinos had to close. There is nothing for those people to do. They were stood down and, they've had to go and apply for, other benefits through Services Australia. There is an opportunity for you now as a business to say, right, we value you as an employee. We want to keep you on the books. Once the casino opens, we want to have jobs for all of you again. we are going to start paying you the $1,500 a fortnight. We're going to claim the money back from the ATO, come back, receive the money from us, so that when things go back to normal, you will go back to your job as normal. So even if the person is not working, you can apply for the $1,500 from the ATO and pass that on to your employee. The final group are stood down employees who you want to bring back into the workforce. And I had another call from one of my friends last night. His wife was a part-time employee at a particular organisation, and she had been stood down because they just didn't have the money to pay her. Now that they're getting this $1,500 from the ATO, they are able to bring her back to work. So they rang her up and they said, right, we want you to come back into work from Monday. Now we're getting the money from the ATO, we can afford to bring you back. And this is, I suppose, the other big benefit for this organisation. This business can now operate again. They can have an employee who comes back in and can be productive and add value to the organisation. So they could be doing work to help build and prepare for when business returns, or they could be doing work to keep the business, operating now. So they're getting money from the ATO, but more importantly, they've got a worker back who can add value to their business. So those are the 4 groups of employees you might want to consider bringing back in, start paying them and adding them to your list so that you get the money from the ATO.
Okay, just a question on that, Jason. It might be something we're going to deal with a bit later, but can there be sort of a composite position where you've got people that you've terminated, so you decide to rehire them, but you rehire them, but they're stood down. So you bring them back to do nothing, but can you do that and start paying them?
Absolutely, yes. I think that's absolutely fine. And funny you mentioned that. We do have an example of that, coming up. But yes, one of the key objectives of this is, for you to keep your workforce, to keep that relationship with your employees, to have a pool of people who are ready and available for once the doors open again. Welcome back. I've got you ready to go. The risk is if we don't rehire them, they might go and find a job somewhere else. So that when we reopen our doors, it's like, that person's not available anymore. But by rehiring them, even standing them down, they're back in your little group. They know that they're loved and valued, and you want them to be part of your organisation. They'll be there ready to go. You're not going to lose those employees to someone else. So yes, absolutely good thing. Also on the stand down employees, my personal thoughts on this, you might have stood somebody down, they're not getting any pay. Now that we're getting the $1,500 from the government, you might be able to bring them back and take them out of stand down and say, look, you're still stood down, but we'd like you to come back and do 1 day a week's worth of work so that your wages bill doesn't exceed the $1,500 you're getting from the ATO. And that's a win-win for everyone. You're getting productivity, the employee feels that they have a purpose, and they're getting an income, and they're keeping themselves busy, and the business is growing. So yes, absolutely, there can be all sort of hybrid models of this.
Okay, so we've decided as an employer, we've decided who we think should be getting paid or getting the subsidy passed on to them. Presumably we have to tell employees about that.
Absolutely. So there are lots of employees that are going to have, 2 employers. They might have a part-time job here and a casual job, over there. The government's intention is that you only receive this from one employer. They don't want people getting multiples of this. So step number 3 in the process is you need to notify employees that are receiving the JobKeeper payment. This is primarily so that they know that their employer is being funded by the government, and it avoids the problem of both employers receiving the $1,500 and the government paying more than they need to. So step 3 is if you are going to claim it, you need to notify the employee. And I have a whole range of scenarios here, but let me start with the easiest one, and I suppose the best case scenario. And these examples that we're going to run through over the next couple of slides, I've picked up off the ATO fact sheets. So I've abbreviated them so that they can fit on a slide. If you want to read the whole example where they go into a little bit more detail, by all means, pop onto the ATO website and have a look at those fact sheeting. But the first example is Sarah, who runs a landscaping company and employs 5 full-time gardeners. Now, all the ATO's examples are based on small businesses, where this person has 5 employees or 3 employees. But it doesn't matter. The concept is the same. It doesn't matter whether you're talking about 5 people or 500 or 5,000 or maybe even 50,000 people. The concept remains exactly the same. So Sarah's got her little landscaping company. She employs 5 full-time gardeners and she pays them $1,700 per fortnight. Now, she expects her turnover will decline by more than 30% over the coming months, and she knows that money is getting tight, things are slowing down, and she's going to need to make a decision very soon as to whether she, lays off some people, makes them redundant, asks them to take a pay cut, needs to maybe have some discussions about reducing their hours. But now, as a result of the JobKeeper payment, Sarah will be able to claim the $1,500 per fortnight from the ATO and hopefully keep her business running. Now, I did mention that she's paying her employees $1,700 per fortnight. So as a result of the JobKeeper scheme, Sarah will be able to continue paying her employees their $1,700 per fortnight as per their award conditions or as per their contract. Sarah then claims the $1,500 back from the ATO through the JobKeeper payment scheme. The great news for Sarah is that it's really only costing her now $200 per fortnight to keep those employees on. She's able to continue running her business. That's the best case scenario. Money coming in for the employees that you already have.
Okay, and you've got more examples, Jason.
I have more examples. The next one is about an employer who has employees who have been stood down without pay. So in this case, Zara runs a beauty salon with 3 employees. Now, because of the government directions, she can no longer operate. Those businesses have been forced to close. So she had no other option but to stand down her 3 beauticians without pay. There is no doubt that her business has declined by more than 30%. She's now got no business at all. She's got, 0 revenue coming in. So she is eligible to apply for the JobKeeper payment for each of her employees. And because they are stood down, she only needs to pass on the $1,500 per fortnight that she is given by the ATO. There is no legal obligation to pay what they're being paid before. For an employee who is stood down, you can pay them the $1,500 and get that money back from the ATO. So the beauty here is that Zara maintains a connection with her employees, and they're sitting there receiving income from her, and they're ready to jump back into action as soon as business starts. But once again, the key thing here is Zara is required to advise her employees that she has nominated them to receive the JobKeeper payment. There's 2 reasons for that, because if these people have another job which is also receiving the JobKeeper payment, they can't receive it from 2 sources. But particularly for Zara's employees, I am guessing that many of them have already gone to Services Australia and might be getting the job seeker payment or some sort of unemployment benefits. Now that they're going to be receiving money from their employer again, they will need to notify Services Australia that they're no longer, or they'll need to notify them of the new income, and that will obviously, affect the amount that they're receiving in terms of unemployment benefits. So that is why we need to tell them that they're getting the money, so that they can make sure they're not getting it from 2 different sources. And there's also an obligation of them to go back and advise what I like to call Centrelink, but I believe is now called Services Australia. Chris has gone quiet. Shall I?
No, you're good. I just forgot to click that button. You can't get money from multiple sources, as in Services Australia and the employer through the JobKeeper. What if you've got more than one job?
Now, this is where things now start to get, really interesting. And I'm using the ATO example here, but I've added my own little interpretation to this as well. So I'll highlight that as we go through. So this is a worker with multiple jobs. In this case, Michelle works 2 part-time jobs. She works at an art gallery during the week, and on the weekend, she works at a local cafe. Now, due to the coronavirus, the job she has at the art gallery during the week, the art gallery unfortunately had to close down, and she was stood down without pay from that particular job. Michelle continues to work at the cafe. They're still doing takeaway, and she's doing delivery orders for the takeaway. So she still has a source of income with the cafe. Michelle can only receive the JobKeeper payment once from one employer or the other. And the big principle of this JobKeeper payment thing is all about an employer essentially nominating who their primary employer is. Now, there's no official form for this, and as businesses, we need to make some assumptions here. But what the ATO is saying is if somebody is working for you and they are claiming the tax-free threshold, it is reasonable to make an assumption that you are their primary employer, and certainly under those circumstances, you can then go ahead, start paying them the JobKeeper money and make the appropriate claim for the subsidy with the ATO. So in this particular case, she had two jobs. The art gallery has totally shut down and she has the other job at the cafe. Assuming that she is claiming the tax-free threshold from the art gallery where she is totally stood down, under those circumstances, the art gallery can make a claim. They pay the $1,500 to the employee and they get the money reimbursed. Now, because the art gallery has opted into the job seeker scheme, the cafe would not be entitled to claim for Michelle at the same time. It can only be one or the other, which is why it's very important for the art gallery to very quickly contact Michelle and say, we know you are stood down, you're a valued employee, we are going to apply for the JobKeeper payment and we're going to start paying you the $1,500 a week immediately. If Michelle has another employer who had already told her that, this is her opportunity to say to the art gallery, oops, no, you can't actually apply for me, I'm getting the JobKeeper payment, somewhere else. The really good news here for Michelle is this JobKeeper scheme is not means tested in any way. So the income that Michelle receives from her job at the cafe does not change her entitlement to the JobKeeper. So will be able to receive JobKeeper money from the art gallery, which was her normal job during the week, and she can still have a second job where she receives additional money from the cafe. So we as payroll professionals don't need to worry about somebody having a second job and getting additional sources of income. Our only obligation is to notify employees that we are going to start paying them and that we are claiming the JobKeeper payments, so that the employee can say, oh no, actually I've already got that money coming in from somewhere else. Now. Okay.
Yeah, I don't know whether I'm cutting across you, Jason, but there's still an onus on the employee, as you've already mentioned, to volunteer that information. I think that's particularly important for quite low income earners, because the tax-free threshold is not an absolute criteria, because you could claim the tax-free threshold from multiple employers if you're a low income earner.
That's right, you absolutely can. So yes, and that's why we have to notify the employee, because it could very easily be, in Michelle's world, both of those employers might immediately get very excited about this JobKeeper payment and immediately start applying. So if Michelle had both of them coming to them and saying, we're both going to claim, and pay you this, she would need to say and choose one or the other. So, which leads me to my option 2. Now, my option 2 is not in the fact sheet. It's based on our understanding of how it works. So there's a key requirement here, a key concept here. As an employer, you do not have to opt into this scheme. If you think about it, if you have a large workforce that you have stood down, the way the scheme works is you need to pay them for an entire month, and then at the end of that month, you will get reimbursed by the ATO. Right now, you may not have the money or the cash flow to pay all your employees $1,500 a week that have been stood down and wait a month to get that money back from the ATO. Some businesses just won't have that money. So there is no legal obligation for an employer to enter into this scheme. It is an opt-in scheme. If it is too hard for you, if you don't want to do it, you don't have to. Which opens up, an interesting, concept. Sticking with our example with Michelle, and in my first time around, we decided that the art gallery was going to start paying Michelle and claim the JobKeeper payment. The art gallery may not have the money or the cash flow, or they may just decide that it's all too hard and they decide not to make a claim. Under those circumstances, then the cafe would be able to make a claim. So the good news for the cafe is Michelle, in theory, could say to the cafe, I'm not receiving any money. I have been stood down from my other job, and they could say to the employer at the cafe, I'm not receiving the JobKeeper payment from anyone. If you like, and if it would help your business, you would be entitled to claim that money and get the $1,500 from the government, which would help subsidize my wages. Good news for Michelle is, that guarantees her job at the cafe for a much longer period of time. So in theory, something like that could work. There could be a little bit of, and the ATO may not like me saying this, but a little bit of cherry picking in terms of which employer you choose to receive the JobKeeper payment from for you to get the best possible outcome for yourself. So that would certainly be within the legislation or within the spirit of the legislation. So certainly something interesting to think about there.
Probably another question, you've mentioned the whole cash flow idea that employers might not be able to just have money on hand to do it while they wait. Can they wait to get the money and then retrospectively pay?
No. Short answer, no, Chris. It's very clear they're talking about you need to pay the employee and then it'll be paid to you a month in arrears. And the key thing here is the ATO will be aware of what's going on. Now we have single touch payroll data. They will be able to see whether your employees are getting paid or not. So I suspect, one of the things they're going to do, if they can see that you've not uploaded any single touch payroll files for the last month, or those single touch payroll files, have a very low dollar value, and it's like, hang on, why am I just going to pay, all this money out to this employer? I can't see that they're actually paying their employees. That could potentially jeopardize your chances of getting that money. So the concept is you pay the employee first. At the end of the month, you notify the ATO, these are the employees that I've paid. These are the employees that I would like to be reimbursed for.
Okay.
All right, here's the big example, Chris, of the one that I've been building up through the whole presentation, the rehiring an employee that had been previously let go. As I said, an employee was made redundant after the 1st of March. We are allowed to bring them back onto the books. So let's have a look at this scenario. So in this scenario, Miles worked as a permanent part-time personal trainer at a gym for 6 months and was made redundant on the 20th of March 2020. But he meets the test because he was actively employed on the 1st of March 2020. He was made redundant after that date. And the reason he was made redundant, gyms aren't allowed to be open, so he was, made redundant. Now, at the time Miles was made redundant, he was not entitled to any redundancy pay because he'd only been there, 6 months. So we were assuming that he's gone off and claimed, various unemployment benefits. Now, the good news here is now that we have the JobKeeper payment scheme, the gym could make the decision that we want to re-engage Miles so that, when the gym reopens, we'll have him available as a personal trainer and he'll be ready to go. He's not going to get snapped up by some other gym. He's not going to work somewhere else and change careers or whatever. Let's keep him on our books so that we're ready to go. Now, this example was really good from the ATO. So in the 3rd paragraph, it talks about after being made redundant, Miles had registered an intent to claim with Services Australia and seek unemployment benefits, which are now known as JobKeeper payments and the coronavirus supplement. Now, Miles, in this case, is single with no children, and in total, he'd be eligible to receive $1,124.50 before tax from Services Australia. If Miles was to be rehired by the gym, even though he is still stood down under the JobKeeper payment scheme, he would be entitled to the full $1,500 per fortnight, which is better than his $1,124. It's a win-win for everyone. Miles gets more money, and you get to keep him on your books and maintain that relationship with Miles so that when business picks up, he's ready to go. Adding my own little personal opinion onto this one, Chris, if he is stood down, there's only a legal obligation to pay him the $1,500. So we pay him and we get the exact amount back from the ATO, so it doesn't cost us any extra money. But certainly, as part of rehiring him, if I was an employer, what I would be doing is saying, look, let me rehire you. We value you as an employee. We're going to give you the $1,500 JobKeeper payment. Although you are stood down, we would like you to work 1 day a week, and we choose, an appropriate amount of time so that, his pay is still within that $1,500, and we could have him working. He could be working on new workout routines. He could be working on new, meal plans, and building and creating collateral that the gym could use, so that when the gym reopens, it's like, we're open for business, and while we've been closed, we've been working on a whole new workout scheme, new classes, new eating plans, and you're ready to launch that straight away. So not only does Miles get to keep his job, we can get some work out of Miles and, add some value to our business, keep him busy so that we're ready to go when we're open again.
Okay. Now, Jace, that's good. But this example is really a bit simple, isn't it? That it doesn't always work just like that. So there's some questions that payroll people would have around. Okay, you've made somebody redundant, and so you've paid them out, lump sum D and eligible ETP and all these sorts of amounts, and then you bring them back. So are there any issues around the fact that you've made this paid it as a genuine redundancy, and then a week later you're bringing the employee back?
Yes, there are some potential concerns around that. So we know that when you make somebody redundant, if it is a genuine redundancy, they are entitled to a lower rate of tax, and they're also entitled to redundancy pay, and that redundancy pay, is often untaxed using the lump sum D rules. The key criteria for a genuine redundancy is that when you make them redundant, there is nothing for them to do, and there are no plans to re-employ the person. It opens up an interesting can of worms. If we go back to the GFC, the global financial crisis, what we saw at that time when businesses were seeing a downturn, lots of employees were made redundant because it met the criteria. There was nothing for them to do. There were no plans to re-employ them. They received their redundancy pay. 6 months later, when the economy started to pick up again and businesses were looking at rehiring, who's the best person to go back and reach out to? But those employees that you had previously made redundant, that and value and understand your business. So a lot of those businesses went back and re-employed those people. And that was perfectly fine because the redundancy was true at the time, and now there was a legitimate need for them. We're in a really tricky situation here, Chris. Let's say we did make Miles redundant on the 20th of March, and let's say he had worked longer, and as a result of that, he got a whole big redundancy pay and maybe $10,000 worth of tax-free money. I'm a little torn. I think we meet the requirement that when he was made redundant, it was a genuine redundancy. There were no plans to re-employ him. We couldn't have anticipated that in a week or two's time there'd be a whole new scheme. I believe it is perhaps and probably still a genuine redundancy. Would you agree? Chris has gone quiet. I'm just going to guess then that Chris agrees with what I was saying. So
of course, I agree with you, Jason. Technology. Yeah, I think the criteria is, as we've known for a while, there's no intent. But I think there's another question that might be raised here. Given we're bringing an employee back, they got all this redundancy pay, and now really they've got their job back. Could an employer seek recovery of redundancy pay?
You could certainly ask, and it would come down to the employee. So if I'm Miles and I received this nice big $10,000 redundancy pay, or maybe more, maybe I worked longer, maybe I got a very big, nice, genuine redundancy pay. I suppose, do I want to give that money back? And the question is, am I better off remaining redundant and keeping all that money that I received, tax-free? Or am I better to go back and receive $1,500, a fortnight? So there is no obligation on Miles to return. And even if we offer him a job, he could say no. But I think as we're thinking about bringing people back, you need to have some of those sorts of discussions. Would you like to come back? What happens to things like sick leave? If I come back, can I give you back my annual leave, and can that be recredited? Will my sick leave be recredited? So some of this, I think, is a HR issue in terms of how are we going to go about offering these people's jobs back, and what sort of things do we need to consider? So it's interesting times, and I'm going to fall back on Chris once again. We don't have a law on this at the moment. Maybe in a week or so, the ATO might provide some more guidance around this, but right now it's just not there. So you and I are making assumptions based on the law as it stands today.
Thank you. Now, probably time to move on to the next step. Now, obviously not everyone gets paid the same amount of money. So the way this $1,500 subsidy amount flows on will be different for different employees. So can you run us through that?
Yep. All right. And there's probably three different categories here. The first one is people who are in work at the moment who earn more than $1,500 per week. And this is an example. We've got someone called Wango. He's currently employed and he earns $3,000 a fortnight right now. What's our obligation under the JobKeeper scheme? We continue to pay his wages per normal. He comes into work, and then then we go back and claim the JobKeeper payment. So although we're paying him $3,000, which is what he's entitled to under the award or under his employment contract, he still gets his normal pay. We just get subsidized, at $1,500 per fortnight. What about if you had somebody who earns less than $1,500 per fortnight? And in this example, I've got someone called Chris. I hope it's all right if I share your salary information with the group, Chris. But a lot of you might be surprised to learn that Chris only earns $1,000 per fortnight working here at TAPS. What would I have to pay Chris? Under this rule, I would need to pay Chris his normal $1,000 per fortnight, but because I am claiming $1,500 from the ATO, the law here actually requires that every employee gets at least $1,500. So I don't get to profit from this. I don't get to keep it. This money is designed to be passed through to employees. So Chris, who only earns $1,000 per fortnight, I still pay him his normal $1,000 per fortnight. I would need to top up the extra $500 so that his pay is $1,500, and obviously I claim that full $1,500 back. So it doesn't actually cost me anything. The good news for Chris is he receives an extra $500 because of this new scheme. The interesting thing we need to think about here is, how do we report that extra $500 in payroll? I suspect we might need to set up some sort of an allowance code where we say, here is your normal pay, and here is the extra $500 top up, JobKeeper allowance top up, you might call it, and that brings him to his $1,500. The third category is somebody who is currently stood down with no work. I'm going to go back to our casino example. All those casino employees, the roulette dealers and the blackjack dealers who are receiving no money at all, they have been stood down. What we can do is we can start paying them $1,500. They must get the $1,500, and then we claim that $1,500 back from the ATO. So it's just passing through the payroll from the ATO through the payroll to the employee, but everyone must get at least $1,500. A couple of important reminders here and things we always need to keep in mind. All JobKeeper payments are taxable, and need to be reported via STP. So throughout the presentation, we keep on seeing, and I haven't been saying it, but it's $1,500 per fortnight before tax. That $1,500 needs to be taxed as per normal and reported via STP. And as I've already mentioned, the ATO can and will be double checking to make sure that employees are getting their money. We will be submitting a list of the employees that we are paying. The ATO will be making sure that they're getting at least $1,500 per fortnight. So always needs to be passed on.
Thank you. Jason, I think one of the most popular questions this week around the JobKeeper payments is whether it's superable or not, and under what circumstances. So I guess giving those three examples, is it or isn't it?
Yes. So let's look at those three examples again. We know when it comes to superannuation, there's a concept called ordinary time earnings. Super needs to be paid on ordinary time earnings. If you are at work doing your ordinary job, that income is superable, and this same concept applies now. So in the first example, Wango, who earns $3,000 per fortnight, because he is at work, he normally earns $3,000. That $3,000 is normally superable. His normal $3,000 is superable. It's super as per normal. In our second example, where we have Chris, who comes to work, he earns $1,000, and at the moment he gets paid super on $1,000. That needs to remain. What is not superable is any top-up payment. So we talked in that last example, he earns $1,000 normally. We have to give him a $500 top-up to bring him to $1,500. The $500 top-up is not superable. And if you think about that ordinary time earnings concept, he's not at work for that $500. It's money which is being given to us from the government and just flowing straight through to Chris, very much in a similar way to government paid parental leave, which is not super. No work's being done. We're just passing that money through. So where no work is being performed, the $500 in Chris's example is not subject to superannuation. But you can always be more generous if you wish. And the third group of employees, the people who are totally stood down and who are not at work, no super at all there. We pay them the $1,500, we get the $1,500 back from the ATO, it just, flows through. So it's only for those people who are at work. We are paying our employees as per normal. Doing super as per normal. We're running our payroll as we always would. We're just getting subsidized money from the ATO. And that's the way we really need to think of. If we're giving them extra subsidized money for time that they're not working, it's only under those circumstances that it's not superable. If I can just add a little thing here, one of the questions we got coming through from people who wanted to do this webinar, they said, what happens if somebody's on annual leave or sick leave or something? Can I still get the subsidy? Absolutely yes. This is to subsidize your total payroll costs. So if someone's on annual leave or long service leave or sick leave, you're still entitled to that $1,500 subsidy because you're still paying the employee. Business as usual there.
Just on that, Jason, would it be prudent to effectively reverse out the annual leave payment and have it processed as a JobKeeper payment? In terms of the way, I guess your own record keeping and balancing against what you're receiving from the government?
No, I don't think so, because if they are on annual leave, they are using their annual leave balance, and that balance needs to be reduced. So it's almost irrelevant to the employee where you're getting the money from. They are on annual leave, you're paying them for their annual leave, it's coming off their annual leave balance. As a side activity, you're just getting $1,500 a fortnight back from the ATO to cover those costs. So if they're on annual leave, that's what you pay them.
Fair enough. All right. Next thing, we've talked mostly, because that's the way it's been presented by Treasury and the ATO, about fortnightly payments and fortnightly employees. Not everyone gets paid fortnightly or weekly, but weekly, fortnightly, we can work that out. Monthly employees are a little bit different. What do we know?
Well, short answer is we know nothing. We need some more advice about how monthly employees will work, but I'm going to make a big assumption here. So what has the government committed to? They've committed to 6 months at $1,500 per fortnight. So 13 fortnights in 6 months, 13 times $1,500 per fortnight means what the government is giving us is basically $19,500 to fund our, our wages bill. If you pay your people weekly, that would be 26 weeks of 750 to also balance us back to our 19,500. If you're paying people monthly, and certainly they're not at work, ultimately what you're getting is basically 6 months worth of wages at $3,250 per month to balance us back to the 19,500. So you can still pay your people monthly, but what you might find is when you receive that money from the ATO, it won't be in a monthly chunk. It'll be in 13 lots, of 1,500. So for a month, you might get two. They might say, right, there's 2 fortnights in that month. We'll give you $3,000 this month, but over the full 6 months, by the end of the 6 months, you will have received the full 19,500, even though it's not going to match your pay cycle exactly.
Okay, but if we think that through, this subsidy becomes effective on the 30th of March. 6 months after that would be the 29th of September. That's actually more than 26 weeks. But yeah, I guess are we still with we really don't know whether the ATO is going to give us a little bit more than 26 weeks, or are they actually going to give us 6 months?
Yeah, we're really we don't know. And giving away a couple of secrets, I was on an ATO call. One of the benefits of TAPS is TAPS has a line direct to the ATO. I was invited to a consulting activity on Monday. This was one of the questions that we raised. They didn't have an answer for it yet, but they said they were absolutely going to work on it.
We wait. Okay, any more steps, Jason?
Yeah, one last step, Chris. The last step is to provide information to the ATO on eligible employees. So at the end of each month, and so certainly for this first time, the system may not be fully built, but sometime at the end of April, or it could even be the 1st or 2nd or very early in May, once you have registered and you're part of the scheme, at the end of the month, you will need to confirm with the ATO who you have been paying. So you'll need to give them a list of here are all the employees, and let's say you've got a list of 1,000 or 2,000 or 10,000 employees. They'll say, right, okay, you've got so many employees. We will give you $1,500 per fortnight for each of those employees, and then the money will flow back to you. On the ATO website, it does talk about that for most businesses, the ATO will be using single touch payroll data to pre-populate the employee details. So they will already have a fairly good idea of how many active employees you have on your payroll. There'll be some sort of a requirement for you to confirm, yes, these are the employees, ticking yes or no. And this goes back to why we need to notify employees earlier. Some employees might say, no, don't include me. I'm getting this money from somewhere else, so they will need to be excluded from your list. But on a month-by-month basis, you will need to confirm with the ATO, these are the employees that we have paid this month, so that the ATO can give you the appropriate amount of money. And then on an ongoing basis, on a monthly basis, the ATO will touch base and you'll need to provide more information. If somebody has resigned or you unfortunately had to make somebody redundant and that list has changed, you will need to notify them so that they give you the appropriate amount of money. So the first payment will be made in early May, and then as we said, and we've stressed a number of times, payments will be made monthly in arrears. So you pay people throughout April, you'll fill out this form at the end of April or early May, and then you'll get that money early in the first week or so of May. Once again, we need to keep in mind the ATO are building this from scratch, so there's a lot of work to be done between now and then so that they can process this. So the first month payment might be a little slower than normal, but then for the next 5 months, it'll be a very nice, so I'm told, streamlined process. You confirm your list and you'll get that money promptly at the end of the month.
Okay. Well, no doubt there's more questions about JobKeeper than we've covered today, but are there other little bits and pieces that we either know or don't know?
Yeah, we do. We've already gone over a couple of minutes, so this is our last slide, everybody. But there is still stuff we know, and there's things that we don't know. We're getting lots of calls on the TAPS helpline saying, does leave accrue for employees who have been stood down and are getting the JobKeeper payment? And the answer for that would be yes. For those of you who were on our webinar last week, we know that when you stand down employees, they are still deemed to be active employees. Leave accrues as per normal, and it is also deemed to be service. So that is happening now anyhow for all your employees who stood down. Once you start getting this money from the government, nothing changes. The stand down rules come from Fair Work. Merely what is happening here is the ATO is giving you some money to pass on to your employees who are stood down. So, for each of the questions we're getting asked, we need to think about how they fit, in terms of Fair Work rules, and put things together. Having said that, there is stuff that we just don't know. A couple of questions we got over the last couple of days: is the JobKeeper payment to be included when averaging long service leave values? So we know in long service leave in many states, you have to average over the past 12 months and over the past 5 years. Are these payments going to be included in these averages? The simple answer is I have absolutely no idea. If you look at the Long Service Leave Act in New South Wales, for example, it was written in 1955. They obviously couldn't have given any consideration to something like a JobKeeper payment. So, we're going to need to see how the state governments, react to this. So we just don't know. Is the JobKeeper payment subject to payroll tax? Once again, we don't know. This is new. I have a personal opinion. I suspect not. So as we certainly talked about, I think it'll be similar to super. If it is a top-up payment that is not subject to super, I am guessing it won't be subject to payroll tax. But all these things are going to have to be sorted out over the next couple of months. So I'm aware that many of you have lots and lots of questions. What we've done today is basically shared everything that we know right now, and there are going to be lots of questions that we just don't know about. So, and we really need to wait for the ATO, and that's my final thought. We need to wait for the ATO for clarification, and we need to wait for state governments for some clarification of things. But hopefully you've got enough information right now to get yourself started on your journey and decide who you're going to pay and reactivate them on the payroll.
Okay, thank you, Jason. It's been a pleasure presenting with you again. I'd also like to repeat comments similar to what I made last week's webinar. Is I am genuinely impressed by our governments and the way they're responding to this crisis. And there is no country in the world I'd rather be through this. Thank you.
Well said, Chris. So for those of you on the webinar today, we're going to have a copy of all the slides available and a link to the recording on YouTube. So that'll come out in the next few hours. And I've always wanted to say this: if you're watching this on YouTube, like, comment, and subscribe. But for now, I want you all to take care, stay safe, wash your hands. I look forward to seeing you all in real life again very, very soon. Good luck, everybody, and I'll talk to you again very soon.
Thank you.